Anytime you use or trade your virtual currency, that's a taxable transaction.
Hello, Robert Kiyosaki, Rich Dad Radio Show. Today, the good news and bad news about taxes. And so welcome to the program, Tom.
Thanks, Robert. Always good to be here with you.
Yeah, so I want to plug this thing here. I mean, I can't believe it. It's actually readable. Tom sent me this wonderful document here, Generally, whenever Tom sends me a tax notice from the Department of the Treasury, Internal Revenue Service, I don't need sleeping pills. I just fall right asleep. But this thing is pretty good. I can read it, and it says, the Internal Revenue Service is aware that virtual currency, see, you Bitcoin guys, you got Target on your back now. They know you got some money, and they want it. So anyway, Tom will make this available to you. I suggest you get it. There's all the highlights here, what you can and cannot do with virtual currency, Bitcoin. I have Ethereum also. I like the stuff. And there's people who hate it. Well, that's life. So Tom, virtual currency or Bitcoin and Ethereum and all that's a big news. What do you see when reading these wonderful documents, which you can go to your website at, what's your website again?
Wealthability.com.
Wealthability.com. So all you guys out there who are criminals on Silk Road with Bitcoin, get this document. I'm only kidding. So Tom, what is IRS saying about virtual currency?
Well, they say a couple of things that I think is really important. First of all, that anytime you use or trade your virtual currency, that's a taxable transaction. So, I mean, let's give an example. Let's say that Bitcoin became a normal trade. You go buy groceries. When you bought groceries with Bitcoin, that would be taxable because it would be considered a trade for Bitcoin for US dollars. So every time you spend Bitcoin, every time you sell Bitcoin, all of that is taxable. And here's the thing. So on your tax return now, there is a box you have to check to say, did you trade Bitcoin? Well, that means, did you do anything other than just buy it? Okay. If you bought it, you don't have to mark that box, but any other use of it, you have to mark that box. If you don't mark that box, Robert, it's a felony. This is not a civil penalty. Most things on a tax return are just civil penalties, right? They're just, okay, I pay the penalty, get my wrist slapped and I go on my way. Not with this one. This is a felony. They will come after you if you don't mark that. And in fact, you should have marked it.
Trust me, they are coming after, us, because I've done very well with Bitcoin and Ethereum, but Tom knows my tax strategy. I buy, but I never sell. And if I paid somebody in Bitcoin, what would happen then, Tom?
That would be taxable. So if you paid them,
the person I pay,
it'd be taxable both for you and for the person you pay. That's right.
So as long as I'm buying my Bitcoin after I've paid all the taxes, which I don't pay anyway, and I store the Bitcoin into my asset column and it sits there, it's like my gold and silver, right? As long as I'm not using it, it's not taxable.
It's actually just like the gold and silver. So the same thing would happen if you went and used silver or silver or gold to buy something. That would be a taxable transaction too. So it's very similar to gold and silver. The one difference is that if you hold Bitcoin for over a year, you do get capital gains rates. So you get to tax that at 15% or 20% instead of ordinary income. Gold and silver have a different tax rate than that. So that's the one primary difference between the two.
Again, I want to talk about this. This is a document. Go to, what's your website again, Tom?
Wealthability.com.
And in here are all the things you want to know. All you new Bitcoin billionaires or soon to be billionaires, you want to know what to do before you do something stupid, like spend it. So what else would you want to say about Bitcoin or crypto?
Well, there's, a lot of the issue that I think people have is tracking it. The whole goal for Bitcoin is not to be tracked, but the reality is that if you ever were to start to use it, or when you trade it, you do have to track that and you do have to report that, just like if you were trading stocks or foreign currency, something like that. So, the compliance part of it, I think, is one of the most difficult parts of Bitcoin. Is you still have to comply. Just because it's not it's not a foreign currency, just because it's not the US dollar, just because it's not a stock, doesn't mean you don't have to report that transaction on your tax return and pay tax. And I think that's the most important thing. I think people miss that all the time, that they need to know that they're in big trouble if they don't report this correctly. The IRS will come after them.
Well, not that I'm suggesting this, but isn't one of the pitch points, one of the reasons for buying Bitcoin is the government can't track it?
That's one of the pitch points. Okay. So can they track it? No, they can't right now. And it's a voluntary system, right? Frankly, all of our taxes are a voluntary system. But when they audit you and they ask you that question, if you say no, that's a felony. So just know that if they do catch you, you're in pretty big trouble.
I think I was laughing about is I see a lot of these really young guys who now become Bitcoin multimillionaires, and I watch them on their YouTube podcasts, and they're sitting in these huge mansions now they look like Al Pacino and Scarface or something, these huge dragons and all that around them. So obviously they spent some money, right?
Well, obviously they did. And the reality is that, obviously the IRS is going to check on that. And the IRS is doing more and more audits, and they're doing more and more audits on cryptocurrency. Here's the thing. People think, well, I'm a Bitcoin, and so I'm good. But you only can use that Bitcoin for the most part if you convert it to dollars, right? I mean, it's not like there's a huge marketplace where you can go out and buy houses using Bitcoin. Most people aren't going to accept Bitcoin in exchange for their house. And so you're exchanging it for dollars. When you do that exchange, that's where the IRS is going to track you. So it's converting it from Bitcoin to something else like dollars. That's where the IRS tracks you, and know that that's pretty easy for them to track.
So, years when Bitcoin first came out, this guy was selling condos in New York City in the Soho area, and they're accepting Bitcoin. So that would be trackable, wouldn't it? Because you now have a record of the real estate also.
Exactly, because you have a record of that real estate transaction, and you know who the buyers and sellers are. And so, the IRS can be looking at that, or the New York State Department of Taxation can be looking at that, because New York State's even more aggressive than the IRS, and say, well, wait a minute, where's the gain? Where's the reporting on this?
Good. And how, as you know, I like oil, and oil is under fire right now because of carbon tax,
right?
Which is good, because I'm going to make even more money, because I'm going to shift and become a greenie, and I'm going to invest in green new energy, because I get huge deals for carbon tax now.
Of course.
Capitalism is wonderful stuff. You just keep moving around out there. Where everybody else is trying to eat granola and eat asparagus, I'm shifting to a greenie, buying carbon tax credits and making fortunes on it, because I'm going to buy oil with it. But for years, when you look at this thing here, this is the point of having Tom in his book is Tax-Free Wealth, and you should have tax advisors. I love this here in Commodities down here, because in my opinion, this is where your wealth is stored. So as I explained in the last other interviews is, I make a lot of money, Kim and I make a lot of money here. Let me show this. So let's say the Rich Dad Company makes $1 million here. And the next thing I do is I give the money to Kenny. So $1 million comes down here, and Kenny borrows 4 million of my one. So I've now moved my 4 million over here as 5. So 1 plus 4 equals 5. And that's this other tax. This is part 4 of a 4-part series. So please listen to Kenny and Tom and myself and Kim talking about how the entrepreneur, like Donald Trump, unlike Hillary and the other characters, I make my money here as a business owner. The money then goes into Kenny, who borrows $4 million, and we buy $5 million of real estate. How does that save me money, Tom?
Well, so there are major incentives in the tax law for buying real estate, investment real estate. So you get the big tax deductions from the real estate that offset the income from the business. So effectively, you end up not paying tax on the business income because you did what the government wanted you to do and put it into real estate. And you know very well, Robert, the same thing happens if you put it into oil, right? Or if you put it into solar, you get the same type of tax benefits so that you're not paying tax on your business income or your other income.
So let me guess, I'm going to take it to it, because this is what we teach through our cash flow clubs. This is advanced tax strategy and real estate strategy. So it's 5 million. Let's say that 5 million property appreciates up to 10 million. I borrow out the 5. So it went from 5 million. It's now worth 10 million. Kenny raises the rents. I pull out $5 million in cash. Is that tax-free money?
That is tax-free money. Debt is not taxable.
And with that, I buy Bitcoin.
Exactly. So that's how you make your Bitcoin not taxable. Or, you have other options too. I mean, you can buy Bitcoin in, for example, you could buy Bitcoin in your Roth IRA. I mean, there's all sorts of things you can do here once you understand the tax law and how the incentives work.
See, the problem with most people is when they make some money, they want to spend it. And that's the problem. Oh, I'm a billionaire in Bitcoin, but I can't spend a thing because my capital gains tax will be through the roof. But there's things you can do if you have a great tax strategist like Tom. So when we come back, we've been talking more with Tom Wheelwright on how commodities are your most important asset, in my opinion. I mean, this is where my wealth is. I don't save dollars. It's just trash. As Michael Saylor says, about Bitcoin is the dollar is like holding on to an ice cube that's melting in your hand. And they're going to, this is 2021, they're going to print another 1.6 trillion or 9 trillion. I mean, you savers are getting screwed, which means Bitcoin goes up, probably gold and silver goes up through inflation. But just because the commodity goes up doesn't mean you're rich. You still have taxes. We'll be right back.
Are you worried about your financial security in these unprecedented times? If you are, the next minute could profoundly impact your financial security. Imagine waking up to find the economy has plunged and your portfolio has plummeted 30 to 45%, while banks are in turmoil, holding your money hostage while waiting for FDIC intervention. Where would you turn? For many, this may sound like fiction, but it's a stark reality for those that have money on the line. Recently, America's awoke to both the NASDAQ and the Dow, plummeting over 1,100 points each and triggering a frenzy of sell-offs. History shows us how a single event can crash the market, like the dot-com bubble of 1999, the subprime mortgage crisis of 2008, and the pandemic of 2020. But today, we're facing multiple bubbles: commercial real estate, stock, bonds, and banks. Combined with the relentless inflation, the threat of global recession, the specters of war, and you have the perfect storm. The consequences could be catastrophic, plunging us into unprecedented crisis. America is sliding in the age of discord, with trust in institutions collapsing and the democratic norms unraveling. The quality of life for Americans has declined. Wealth is concentrated among the rich, while the median American family income stagnates, creating a dangerously top-heavy social pyramid. Moreover, hostile countries like Russia, China, and Iran are working to destroy the U.S. dollar. Gold is a no-matter-what store of wealth that you need. That's why Robert has been such an advocate of gold, and he trusts Allegiance Gold. Allegiance Gold is ready to help you incorporate physical gold as part of your portfolio and protect it against economic uncertainty. Visit protectwithrobert.com today to learn how you can qualify for up to $5,000 in free silver with a qualifying investment. Or give them a call at 844-3-ROBERT. Remember to mention Robert and Kim sent you when you contact Allegiance Gold. Secure your IRA or 401k today with Allegiance Gold. Visit protectwithrobert.com or call 844-3-ROBERT.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news today is about taxes. And if you're paying taxes this year, it means you got some bad tax advice. And so this is for next year. Because if you're really smart, you can make a lot more money and pay a lot less in taxes legally. And now that I'm a hardcore Bitcoin fanatic, I listen to all their banter back and forth on YouTube, and they saying,
Yeah,
if the U.S. taxes my Bitcoin, I'm moving to Timbuktu. And
doesn't matter.
yeah, but that's what I hear on YouTube, or they're going to run to a country that respects crypto and all this stuff. And I listen to the old guys like myself and Jim Rickards and Jim Rogers, and he says, never forget who has the guns.
Actually,
Never forget who has the guns. He says, remember those guys at Tiananmen Square? They stuck the finger up at the guy and they put a tank and they ran him over. They said, and always remember this, Al Capone wasn't taken down for alcohol. Al Capone was taken down for taxes. And so you can say what you like and all this. I'd rather just hire Tom and make $1 million and pay no taxes. So Tom, tell us one more time where they can get your paper from the Internal Revenue Service.
just go to wealthability.com and type in Bitcoin. You'll be able to find this. It's an Internal Revenue Bulletin.
Yeah, and it's actually pretty easy to read. I read it. It was not bad. But the point here is this. Let me just read it. The Rich Dad philosophy is, I don't, Tom knows I don't have any stocks, bonds, mutual funds, ETF because they're taxable. And I like saving. I don't save money. I save gold, silver, Bitcoin, oil as commodity because it's real. It's based down here. And I just explained to you how I can make $1 million, buy $1 million of Bitcoin and pay no tax. But oil is another one, Tom. So let's say I have extra cash here coming from Kenny or however I get it, which is part of the Cash Flow Club series. Let's have $1 million and I give my money to my friend at, oil company in Dallas. Let's say I give him $1 million for oil exploration. How much of that money is taxable?
Zero. Because if you have $1 million, let's say you made $1 million from your business and you put that $1 million into oil, you'd get a deduction of $1 million to offset the $1 million from the business, and basically you'd pay no tax. And so it's a tax-free investment.
So this is what we teach at Rich Dad. I have a business, I have a number of businesses, but the one people know is Rich Dad. I make $1 million here. It comes down here to Kenny. He ramps it up to 5 million. He has 4 million of debt in it. Is debt tax-free?
It is.
Yeah, and it comes over here, comes in as 5. Kenny then raises the rents, and let's say the property goes from 5 million to 10 million. I borrow out the 5 million and I buy $5 million with oil. What happens to me then?
So now you've got a $5 million deduction. You actually need more income. You need more taxable income. At that point, it's backwards. Now you need to increase your business income so you can actually use that loss.
So the other part of it is because I have all this money coming in tax-free because of Tom, I'm stacking up my commodity column here. So my Bitcoin is piling up. I don't need the cash because I'm catching it off of tax-free debt coming off.
Oh, for sure. That now, you talk about being a greenie and going that direction. So remember, the same thing that we do with oil and the same thing we do with real estate. Remember, all the incentives, they're going to go towards green energy. So they're going to go to solar and wind and whatever kind of green energy they have. There's going to be not right now. We don't just have deductions. We have credits, which is a dollar for dollar offset. I mean, this is like nirvana from a tax standpoint, where you can actually make money from the government by investing.
So I just through my friend Marin Katusa, I just turned bright green. I'm now so green, I look like a frog. And because I'm getting carbon tax credits, Tom, what does that mean?
Well, so what happens is that carbon tax credits are credits that the utility companies and the producers who use the carbons, like coal, for example, they can trade those. So for example, in the West, now I was at a public utility for a number of years, their in-house tax advisor. And that's when the carbon taxes started coming up. And so in the West, they have, for example, really clean coal. In the East, it's really dirty coal. Well, so my company in the West would sell its credits to the companies in the East and make money just on the credits because they naturally had cleaner coal to begin with. So there's a market here for, there's always been, and this is something we don't talk about a lot, but there's a market for tax credits, low income tax credit, housing tax credits, solar tax credits. There's all sorts of markets for tax credits.
God bless capitalism. You know what I mean? Just so wonderful. And the rich get richer. Yeah, you know, is it fair? No, it's not fair. But it's the law. It's the way capitalism works. Is this true all throughout the world, Tom?
It is. It's really fascinating to just watch how when we go to different countries, and of course I always look at the tax law when we go to the different countries, and they're remarkably similar. The incentives, because they all want the same thing. They want cheap energy, they want employment, they want real estate, they want housing, and so the way they get their work done is they use capitalists, frankly, to get their work done, and they give them small tax incentives so the capitalists put in and risk their money into these projects that the government wants.
Yep. So anyway, it's there's a lot to learn. And so anybody who says to you, go to school, get a job, work hard, save money, get out of debt, and invest in the stock market, they're ripping you off. You know, because guys like me just will not do that. And like I'm saying, God bless Alexandria Ocasio-Cortez. And when I first heard that, I went, ooh, she's going to make me a rich man. So I invested in I've made a couple of $1 million on just tax credits this year. And so capitalism is wonderful, except the socialists will never tell you that because they don't know it themselves. Any comments on that, Tom? I mean, what's happening in America today is the gap between rich and poor is horrifying.
Well, it is horrifying. And here's the thing is that it's really a gap in education. And, you know, as you say, it's a gap in financial education more than anything, because the rich get richer because the government gives them incentives and the poor don't know about those incentives. And so they end up paying all the taxes.
And the biggest point here is that when somebody says live debt free, Tom, am I deeply in debt?
Very deeply in debt.
Because debt is tax-free money. We'll be right back. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news today about taxes. So, Tom, before we go out, can you explain why we're not cheating the government? I mean, you talk about incentives and all this. Why am I not cheating the government?
So here's what most people don't understand. There's very little of the tax law that actually raises revenue. Most of the tax law is just the government implementing its policies. Okay, so if the government wants to create jobs, then it gives tax benefits. I mean, we saw this in the PPP loans, right? That was a good example of that, where the government's saying, well, look, if you keep paying your employees, we'll pay for that. Okay, it's the same thing. Most of them aren't direct subsidies like a PPP loan. That was a direct subsidy. Most of them go through the tax law. So if you want to know what your government, no matter where you are, if you want to know what your government wants to have done, wants to have accomplished, look at your tax law. Go to your tax advisor, says, what is for example, what does the tax law say in my country about developing housing? What do they say about commercial buildings? What do they say about solar energy, solar panels? And what you'll find is that most governments are incentivizing certain things that they want to have done because they want the capitalists to put the money, to risk the money, and they're willing to take some of that risk off of the capitalists by giving them a tax deduction.
And so that's why when I drilled for oil, I mean, America is now the so-called energy independent. If we weren't energy independent due to fracking and how much the greenies go nuts, God bless them, but I'm going to get rich because of that. But if we didn't have that, we'd be at war in the Middle East, which we are anyway, because of oil. And so by incentivizing people like me to move my millions of dollars into oil, the government gives me a tax break. America becomes energy independent. Anyway, Tom, thank you very, very much. Once again, how can they get this beautiful document before they become criminals, all you Bitcoin guys?
Just go to wealthability.com and we'll have it available for you.
Thank you, Tom.
Thank you.
This podcast is a presentation of Rich Dad Media Network.